Hi, this is Kerry Artak with Wicked Stocks, bringing you your daily Apple report for Thursday, October 19th, 2023. Before we click through all the charts, just want to encourage you to please click like if you haven't already, subscribe to the Wicked Stocks YouTube channel, share the content if you would with friends and colleagues, and check out wickedstocks.com, where we offer a full suite of both daily and weekly analytical videos, just like the Apple report. Daily analysis in the SPY and the Triple Q, weekly analysis in the S&P 500 index, the NASDAQ 100 index, the long bond ETF, the TLT, as well as two individual stock picks a week that you never see on YouTube that cater to the 3 to 5 week swing trader out to the 3 to 5 month near term investor. We're always looking for at least 20% moves on those stock picks, and you can check it all out for free. Signing up for wickedstocks.com, we offer a 5-day free trial up front, so you can see all of our daily Triple Q and SPY analysis, weekly analysis, all of our stock picks, 8 over the last month that are all relevant still, for no cost. Signing up for wickedstocks.com, you have 5 full days. If you don't like what you see after 5 days, you can cancel that subscription at no cost to you whatsoever. So on with the charts. Big picture, work our way into the day itself. Just a reminder that after having closed above long-term resistance, now support in the 167.32 region back in May, we had the follow-through rally, and then we gave it all back, and we're now retesting this long-term support. At least we did about a month ago. I don't see the case to be made for retesting this, although we may, but just know that holding above the 165.91 to 167.32 region maintains a 1 to 2 month target at 188.83, and over the next year or sooner, this 229.15 long-term channel top anticipated. If we were to close below 165.91 over the next, say, few weeks, it would need to be a weekly settlement, and that would then set up for 3 to 5 months bearish continuation into the lower 130s. But we're nowhere near that right now. And in fact, after having tested 167.32 about a month ago, we did close above this channel structure at 171.40, which we could conceivably test today if we break this 174.98 50% retracement level that has been holding pretty well the last couple of days. This is 50% back from the late September low against the more recent high from last week. And if we do break 174.98, we could test 171.40 on an intraday basis, where I would anticipate a daily low. This is a good day trading level for day traders, and quite possibly through next week. Once tested, we could round back up to this trend line at 180.98 within a week or two of doing so. And quite honestly, after testing 171.40, we just might round up within 2 to 3 to 5 weeks back to 188.16. And in fact, it is the 188.16 level that remains our 3 to 5 week, 2 to 3 week target following the settlement about 2 weeks ago above 171.40. So that's not playing out as anticipated. These time frames are estimates, really. We got hung up at 180.98. So in terms of the downside, I'll just mention once again, 174.98 able to contain intraday weakness, above which 178.57 is in reach. I'll tell you right now that 178.57 is nothing more than an upside 50% retracement over the last week of activity. And what I like about 178.57 is it also intersects inside of the low of the high and the high of the low from a couple of days ago. And they're very similar to each other, but 178.57 is right in the middle. I think it's a solid intraday resistance point. We could top out at 178.57, fall back to 174.98. If we push through 178.57, this 180.98 trend line in reach again, where we can place a daily high. If we were to close above 180.98, I see this 188.16 level in reach inside of 2 weeks. Could be a 1-week move where we could top out well in a November trade, possibly through November, and from there fall off again. I will take you back to this image here to sort of underscore that possibility. We could push into the upper 180s, fall off again through the rest of the year, and within a month or two fall back into the upper 160s. We could fill this wedge out through the rest of the year, and once again it would be a settlement above 188.83 at the end of a week. That would indicate a good low through the rest of the year, with then more aggressive gains anticipated at 229.15, possibly within 3 to 5 months of doing so. Let's take a look at the downside again. Once again, I do have 174.98. That is our downward pivot point for the day. If we break or open below 174.98, you should make way for 171.40. And that's a day trade in and of itself. Breaking or opening below 174.98 for aggressive day traders could be your go short signal down to 171.40, where you could cover that short position, take profits, and perhaps even go long, not only for the day, but perhaps the next 3 to 5 days or the next 2 to 3 weeks. If we do close below 171.40, then we're set up to retest, possibly tomorrow, the long-term support in the 165.91 to 167.32 region, where once again we could bottom out through the rest of the year, possibly well into next. And if tomorrow we were to close below 165.91, it would need to be by a 1% margin of 164.40 or lower, and that would then set up for a low 130s objective over the following 3 to 5 months. But we're not anywhere near that playing out right now. I'm going to leave you with this image. I think it's the most appropriate for the day. I'd like to combine these two. They should actually be combined into one image. Breaking 174.98, signals 171.40, holding above 174.48 should yield 178.57, above which 180.98 in reach, where we can top out for the day. And if settled above 180.98, does pivot the market aggressively upward as we move into next week, 188.16, then likely within a week, 2 at the most. I'm going to leave it at that for Thursday's Apple Report. Please click like, share, subscribe, and check out wickedstocks.com. You have a great day.